Cash flows from operations. The first part of the statement concerns main operating activities, cash transactions involved in buying and selling goods and services. It reveals how much of the year's profits results from the firm's main line of business, sales of posters. Starting with net income from income statements, accountants must make several adjustments to reveal true cash flows rather than paper transactions. Depreciation of $6,770 from income statement is an example of an item that must be added back. Although it was not an expense in determining net income for Perfect Posters, it did not reduce the company's cash. Three additional operating activities, such as inventories, accounts receivable, and accounts payable, also required adjustment. The income statement showed a dollar 1,130 inventory reduction for the year. Inventory was in effect converted into additional cash. Accounts receivable, however, absorbed some of the company's cash. Receivables from the balance sheet for 2004 were $2,165, higher than in 2003. From the year 2003, the balance sheet depriving Perfect Posters of cash, but the increased accounts payable for the year yielded $3,215. It was their cash saving. After making the adjustments to net income, main operations provided cash of $21,533 to Perfect Posters. Cash flows from investing. While this section reports net cash use provided by investing, it includes cash receipts, payments from buying and selling stocks, bonds, property, equipment, and other productive assets. These sources of cash are not the company's main line of business. Purchases of land and equipment made by Perfect Posters used 23,495 of net cash in 2004. Cash flows from financing. This final section reports net cash from financing activities. It includes cash flows from borrowing or issuing stocks, as well as outflows for payment of dividends and repayment of borrowed money. Perfect Poster received $10,000 from issuing long term notes. Dividend payment used $6,000. The overall change in cash from these three sources is an increase of $2,040 for the year. The amount is added to beginning cash from the 2003 balance sheet to arrive at 2004's ending cash position of $7,050. The year to year change in cash position provides information to lenders and investors. When creditors and stockholders know how a firm obtained and used funds during the course of a year, it's easier for them to interpret a year to year changes in the balance sheet and income statement. The budget and internal financial statement. For planning, controlling, and decision making, the most important internal financial statement is the budget. A detailed report on estimated receipts and financial statement is the budget. A detailed report on the estimated receipts and expenditures for a future period of time is the budget. Although that period is usually 1 year, some companies also prepare 3 or 5 years budgets, especially when the considering major capital expenditures. Budgets are also useful for keeping track of weekly or monthly performances. Procter and Gamble evaluates business units monthly, By comparing actual financial results with more monthly budgets, discrepancies signal potential problems and spur action to improve financial performances.